So September has been a very bad month for stocks so far, and a lot of them are tumbling right now. Despite that though, it was also a good time to load up on stocks that I currently own. So in this video, I'm gonna go over the dividend stocks that I bought for this month. Hey guys, welcome back to the channel. If you are new here, my name is Dred and I post personal finance and dividend investing videos and pretty much anything related to money. But right now, I am documenting my journey in paying off my student loans. So if you're interested in seeing how everything unfolds or just want to show your support, then please consider subscribing to the channel, liking this video, and also sharing this video. And with that out of the way, let's get back to the main thing. So this month has been a crazy month so far. The phenomenon called the September effect is in full swing and investors are feeling it. According to Investopedia, the September effect refers to historically weak stock market returns for the month of September. It is generally believed that investors return from summer vacation in September ready to lock in gains as well as tax losses before the end of the year. There is also a belief that individual investors liquidate stocks going into September to offset schooling costs for children. So this is almost similar to the October effect and the opposite of the January effect. From what I learned, although the effect is not an overwhelming indication that the stock market will crash, it still causes further fear among investors. When the market goes down, more investors become fearful for their investments, possibly instigating further sell-off. That just ripples further and more investors sell off until it bounces back because now stocks are at a discount. And that brings me to share with you what I bought for the month of September because it was such a great buying opportunity for me. So let's look at them right now. So here I am on the Webull app and I went over to the history section immediately for my portfolio. And let's go over to the order records, make sure that's correct. We got this as order records. And then for the filter, let's go over to the placing time, custom, make sure it's at the very first of the month. There you go. And then for the order status, let's go to fully filled and let's just check over at buy since that's what we're looking for right now. And let's go over done. And there we go. You can see what stocks I bought for the month of September. So let's look at them right now. The very first one right here is ABR or Arbor Realty Trust. So in my recent monthly income dividend update, I mentioned adding ABR to my watch list as a replacement to two of my stocks, which was AGNC and NRZ. And recently I just closed both positions, giving me an extra fund of $400, which gave me more funds to actually buy stocks for this month. Selling those two stocks right now was apparently also a good idea because of the September effect, which I totally didn't know beforehand. And that was purely just coincidence that it happened. But anyway, I'll explain more in detail why I sold out or closed these two positions in my next dividend income update. But to those who don't know ABR, they are a real estate investment trust and direct lender that provides loan origination and servicing for various real estate assets. And right now, this is their dividend scorecard from Seeking Alpha. They have a dividend yield of 7.85%, an annual payout of $1.40, and a payout ratio of around 70%. They have a 5-year growth rate of 17.05, which is very attractive, and then a dividend growth rate of 9 years. So as you can see right over here, it is a quarterly stock, and while ABR is not a monthly dividend stock, I believe it is a better option than the two I previously had, which was AGNC and NRZ. So there's only one transaction that happened for ABR in September, and as you can see right over here, let's look at that. And that happened on the 10th of September where I bought 10 shares of ABR at a price of $18.15. Now obviously I did it also as well through a limit order because always do a limit order. And I've always been saying to use a limit order because you can at least take advantage of even the smallest movements in price. And even if you don't hit your target price, you still have tomorrow to try again. Anyway, my 10 shares of ABR now accounts 2.5% in my portfolio, and I at least want to bring that one to 5% to balance out my portfolio. So let's move over to the next one and let's go over here. And as you can see, it is EPD. I've been loading up on this stock for quite a while now because it still hasn't gone back up to the $25 levels. And because of that, it's a great buying opportunity for me. I can simply just dollar cost average this stock so that I can get more dividends every month at a discount. But here's a quick detail about EPD. It is a midstream energy company that stores and distributes energy, and I only made 2 transactions for EPD in the month of September. So if you look at the first one right over here, EPD, the first one happened on the 10th of September and I bought 3 shares at a price of $22 $2.28. Now, if you go back, like you can see right here, EPD again. I did the second purchase on the 20th of September and I bought 6 shares at $21.57. And like I said, I've been loading up on this stock because I wanted to add more to my monthly payers instead of my quarterly stocks, which you will actually observe later on. So with these 2 purchases, I now own 20 shares of EPD with an average price of $22.36, which is at least 50 cents lower compared to my previous update. And right now, EPD holds a position ratio of 6.01% in my portfolio, which is close to double than what I had last time. So let's go back over here, and as you can see, the next one is PCI. So PCI here is a very old stock that I own way back in my TD Ameritrade portfolio. I haven't added much to it except buying 1 share back in June. But if you don't know PCI, it's a closed-end fixed income mutual fund launched and managed by Alliance Global Investors Fund Management LLC and co-managed by Pacific Investment Management Company LLC. It invests in fixed income markets across the globe with an emphasis on opportunities in developed and emerging global credit markets. And this is their dividend scorecard from Seeking Alpha. They have a dividend yield of a whopping 9.96%, which is a crazy amount, and they have an annual payout of $2.09. They don't have a payout ratio, but they also have a 5-year growth rate of a negative 0.56%. Obviously a very abysmal amount right here. Not really a good indicator. But anyway, they have a dividend growth rate of 0 years. They haven't been growing their dividends consistently. And as you can see right here, this is a monthly dividend stock. They have been paying me dividends since I can remember, although inconsistent when I look more into it. I may or may not hold on to this stock for a longer time, but I do like the fact that they are actually paying me dividends every month. But of course, there are better ones out there. I just have to look for them. I'm just holding on to it because I still don't have a better alternative. And let's look over here. I only did 1 transaction for PCI, and that happened on the 20th of September, where I bought 5 shares of the stock at $20.95. I pretty much added PCI because I was at the last $100 in my balance, and I just thought to myself, you know what, why not just buy the stock? I'm actually, looking for stocks anyway that are monthly dividend payers, and add it to my portfolio so that I can get more dividends every month. And with this loan purchase, I now own 20 shares of PCI with an average price of $21.09. PCI currently holds a position ratio of 5.83% in my portfolio, and I won't be adding more to this stock because I'm not sure whether to hold it or not. But let's go back over here, and as you can see, the next one is AbbVie. AbbVie hasn't been performing well for the past month. They hit a high of around $120 at the beginning of the month and then has slid down to the level that it is in right now. But that's totally okay because that's just a good buying opportunity for us dividend investors. And anyway guys, if you don't know, AbbVie discovers, develops, manufactures, and sells pharmaceuticals around the world, and their most popular product is Humira, a therapy administered as an injection for autoimmune and intestinal diseases. And for AbbVie, I only did 1 transaction for the month of September, and that happened on the 20th of September as well. Let's go over here. As you can see, I only bought 1 share of AbbVie at $106.45. Compared to when I first bought AbbVie around $114, it's actually $8 less now. While I wasn't able to buy more of AbbVie because it is a quarterly stock and I've been focusing on buying monthly dividend payers, this purchase significantly reduced my average price. With this transaction, I now own 3 shares of AbbVie with an average price of $111.65, which is at least $3 less compared to last month. And right now, AbbVie holds a position ratio of 4.42% in my portfolio, which I plan to bring to at least 7%. So let's go over to the next one right here. Let's go back, and as you can see, it is Main Street Capital, ticker symbol MAIN. So MAIN hasn't been performing bad or good either. There weren't any crazy price actions happening throughout this month, so it was a little bit hard for me to kind of like see at what price point I was gonna get into. But nonetheless, I added more to the stock. So let's go over here and check it out. And Main, I bought that one on the 20th of September, and I only bought 1 share of Main at a price of $40.73. Now, even though it's a very small amount, I'm still very happy with this purchase because I added more to my monthly dividend stock. And with this purchase, I now own 5 shares of Main with an average price of $41.56, which is at least 20 cents less compared to last month. Right now, Main holds a position ratio of 2.85% on my portfolio, and I do plan on bringing it to at least 5%. So let's go back to my list. And as you can see, the last purchase that I made was with NYCB, or New York Community Bancorp. NYCB provides banking products and services in the Metro New York, New Jersey, Ohio, Florida, and Arizona areas, and they offer a wide variety of your typical banking products. This position is fairly new to my portfolio, but I'm not complaining about it, and I actually like how it's performing. It's not too bad, and it's not too good either, although it was moving in an upward trend. For NYCB, I only did one transaction for the month of September, as we can see right over here. And that one happened on the 21st of September, where I bought 9 shares of the stock at $12.46. For this month though, I was thinking of buying Lumet Finance Trust, ticker symbol LFT, because they pay their dividends this month. However, I was already too late because their ex-dividend happened on the 14th of September. So I could not buy anymore, because if I did buy anything, it would not even count towards the next paycheck. But with this NYCB purchase, I now own 16 shares of the stock with an average price of $12.24, which is 30 cents higher compared to last month. And right now, NYCB holds a position ratio of 2.76% in my portfolio, which I'm thinking of maybe getting it to at least 5% or maybe as high as 7%. So moving forward, I'm gonna try my best to add more to my monthly dividend stocks because I want to get paid more dividends more frequently. I'm still going to add to my quarterly stocks, but probably less, or maybe when the situation needs it. I really want to increase my dividend income every month because the pattern right now for my dividend income is more of a roller coaster track. For 2 months, it goes really high, and then the 3rd month, it just dips. I'm not concerned about turning my dividend income right now as a source or main source of income because it just can't become that at this stage. But I am more concerned if it is not growing. I mean, what's the point of reinvesting these dividends back, if we can't even grow it? Because at the end, as dividend investors, we want to grow our dividend income to a point where it can pretty much take care of us very comfortably in the future. And that's all I got for you guys. Thank you so much for watching this video. I hope that you learned something here, and if you found any value in this video, please consider liking this video, sharing this video as well, and also subscribing to the channel because that helps with the YouTube algorithm. It helps with this video getting pushed out to more viewers so that they can see and get informed, pretty much get into the dividend investor life as well. And also guys, I'm on Instagram at DailyDread. Please add me there so that we can chat, collaborate, and exchange some ideas. Thank you so much again for watching. I hope you have a wonderful day, and I will see you in the next video. Bye.